Hey, what's up, everyone? Good morning. How we doing? It is December 17th now, and a pretty big week has started. A pretty big week, and we're starting to see both of these markets continuously holding out different general paths, one might say. So one of the big things that we've got this week is rollover. Naturally, rollover week. We're moving into the 2025, the March contracts, and we're moving away from 2024 as a whole in the futures trading market. And what we've seen specifically is that markets have seemingly started to diverge in a few different aspects. Number one, right, overall, the volume yesterday was actually divergent on the Nasdaq versus the S&P, meaning that the Nasdaq had heavier volume on the current contract, which at the time, right, or I think the current contract is still the Z24, while the S&P actually had heavier volume on the H25 from next year. So we're still getting a pretty decent divergence, not only in that perspective, but also in the perspective of where markets are headed right now and what's going on with big value names versus the overall market in general. So if we take a look at how this thing is shaping up from a value versus just standard perspective, we put the SPY right next to the RSP here, both on, right, we have the SPY on the left-hand side, the RSP here on the right-hand side. This is the equally weighted, you can see equally weighted ETF, multiple down days in a row. The SPY in itself it's been holding out in essence. It hasn't necessarily been through a trough of down days or up days, but it is kind of holding kind of flatline. So we've also seen value shares in the tune of Dow Jones that have taken a different approach or a different direction as well. But generally, no matter what you look at, where you look at value, it is taking a pullback in comparison to growth, right? Well, it's been pronounced for much of the year. Things have really kicked off after the aftermath of the U.S. election. Fresh highs kept being notched on by the NASDAQ and big tech names, which recently, right, the NASDAQ composite, right, not the other one that we look at, it crossed the 20,000 milestone for the first time. It also had 38 record closes this year compared to the Dow Jones Industrial Average, which just posted its longest losing streak since 2018. So tech stocks are getting another boost amid the outlook on interest rates, as well as staying power of artificial intelligence and the enthusiasm over crypto, and UAI favorite like Broadcom, which has inched up to a higher net holding on the S&P. I think it's maybe like sixth or something, if I'm not mistaken, maybe fifth. I'm not fully aware exactly which level it is, but it's moved up pretty quickly here into the $1 trillion market cap. And we also saw that Michael Saylor's MicroStrategy was also added to the NASDAQ 100, the index that we generally follow along, helping propel the overall composite index by 35% year to date. On the other hand, the Dow Jones has faced challenges from several of its constituents in its healthcare, energy, and industrial sectors. And to clarify, the blue chip Dow is still up 17% in 2024, which is impressive. It's a very good return based on the historical basis. But all other indicators suggest that the U.S. stocks are still the place for investors to be in 2025, as political and economic troubles hit many West nations from France, Germany, South Korea, and Canada. Many are also betting on policies of the incoming Trump administration, whose stance on deregulation, tax cuts, efficiency, and tariff-driven investment could point to a resilient economy. And overall, right, this doesn't really change the fact that a lot of quote-unquote frothiness has been exhibited in the markets, as well as pretty big divergence in terms of what's going on in the overall sectors, right? Especially as we're going into the Santa rally, especially as we're going into the Fed this week and a rollover week. Generally, rollover weeks are a bit wonkier by themselves. A rollover week, right, we're going to the next contract in the future, so obviously we're looking at the futures in the S&P, all of a sudden if it's trading 61.30, 61.40, you shouldn't be alarmed. It's just the rollover, it's the same thing, but you're seeing big tech is rallying pretty aggressively. The Nasdaq continues making new highs after new high after new high, while the S&P is staying stagnant. You're seeing the Dow Jones pulling back pretty aggressively, which generally has an inkling to lead the S&P. Also, the equally weighted S&P here has been pulling down. So a lot of divergences across the board, and this is ringing a lot of alarm bells for traders and investors alike who are looking at this, trying to call tops continuously. They're like, this is it, this is over, everything, it's all over, everything's going to crash, everything's going to come tumbling down, and they keep shorting these highs while big tech just continues plowing higher and higher and higher, making everyone look like an idiot. So, as I do recognize the divergence, I do recognize that breadth is at an extremely oversold territory right now, considering where we're at. Right, we're at all-time highs while breadth is extremely oversold. I think that this just presents an opportunity for the end-of-year rally and get everyone continuously short, thinking that the first short is going to be right off the year, and it's going to probably take some time into Q1. But things do look right a little heavy-handed into the highs. I think it's just like a very, very difficult thing to be like, oh, okay, this is the top, this is the top, this is the top, until we start seeing everything rolling over, which is inclusive of big tech. And these are things that we haven't seen right now. These are things that are actually seeing the complete opposite. Trying to short the Nasdaq right now is like a suicide mission. And I think that overall we still have some more upside to explore even in the S&P, rather than looking at this thing trying to be like, oh, just keep selling everything, keep selling everything, keep selling everything. I recently rolled over the symbols. I didn't trade yesterday. I was very sick. So I'm not aware of the current price movement and what's going on right now, but the S&P realistically on a new contract, 61.35 area is the place to beat if you want these longs to continue and grab the momentum and try to hold out a new high or an attempted new high. One of the days I can see here for some reason is missing on the data, but that's what happens when you don't roll over yesterday and didn't trade yesterday. But realistically, I see 61.35 area as a key marker for the S&P to just like start moving above. That's going to be a generalized pivot on today's session to allow for upside versus downside to come through. Nasdaq, I'm more so watching the 350 area to see if we can actually sustain that low volume kind of interesting spot where we have held so far from the overnight session and yesterday's session. There was a little inkling of imbalance there. So I'll leave you with that. Let's see what we get throughout the week. We have an all-important FOMC meeting tomorrow where they have the pretty high probability of cutting 25 basis points. We'll see how the dot plot moves, but also it does seem like they are maybe mistakenly cutting very quickly, and a lot of people are looking at it as a potential quote-unquote hawkish cut, right? So what does a hawkish cut mean? Generally speaking, a hawkish cut would mean that they're going to cut, but they're going to take a very hawkish tone with where they see the future of the rate decisions going into next year. It's the final one of the year. It's the final rollover. It's the final full week of trading. It's the final lot of things of the year. So I think that this week is going to be a bit wonky and interesting in the markets, and we'll kind of see where that shapes up. So it's not one of the weeks to go crazy, right? A lot of traders have already ended their year, and I think that many of you should also look to do the same. A big review towards the end of the year and make sure that the next year is that much better and that much stronger, and we'll start from there. So I appreciate you guys. Let's open up.